As I mentioned, there was actually some technical glitches. There was some problem with the voice. So yeah, we were talking about the commodity updates. About the silver, we were talking. So I was talking about the silver. Actually, silver is also moving in the same direction as gold. It has actually dropped below 2.30 lakhs per kg on MCX, which is actually down close to 1,000 rupees, roughly half a percent on the global side. Silver is actually trading just under $60 on ounce after already falling more than like 3% the day before. So, same story here. Dollar strengthens and rate worries are like outweighing the safe haven demands for now. So let's just talk about the crude. Crude is actually the hero here. Brent crude is trading close to $76 per barrel, and it's actually up sharply because of the overnight US airstrikes on the Iran and the oil sanctions news. But here's something new that's coming through the morning is Saudi Arabia has actually reported reduce its official oil prices for coming August for buyers in whole Asia. So this is giving a bit of relief because it eases the fear around India's oil import bill. While the Iran situation is pushed, prices are like up initially for now. This move from Saudi Arabia, Saudi is like working like a small cushion on. So definitely, it's a point to keep watching as the days goes on today. And if we take a rupee, it opened kind of weaker this morning, mainly because of the nervous mood which is created by the oil prices jump. But as day got has progressed, there is a early signs that the rupee is recovering a little bit, and that's again linked to the same of these price cut news which is calming some of the import cost worries. So just don't get surprised if the rupee number moves back or forth quite a bit today. It's actually being pulled in the two different directions at the same time. And one more thing, one small point everyone should importantly notice is everyone is also waiting for the minutes of US Federal Reserve's its last meeting, which should come out very soon. If that sounds more hawkish than expected, gold and silver could come under even more pressure than we expected. So some of the commodities in a single world, like gold and silver, are down today because of the strong dollar and rate hikes worries. Crude oil is also like up because of the Iran tension, but getting some relief from the Saudi's pricing more, and the rupee is stuck right now because in between these both stories. So this is genuinely a segment worth watching closely today because just one fresh headline from the Middle East could like flip this whole picture within a single minute. So actually, there are some stocks you should keep in your wish list. I'll be telling. One is persistent system. I'll just open its chart. So you can check here persistent systems. It's actually in downtrend now. Just keep this stock in a wish list for now. Just check this stock for the whole day. By end of the session, we can discuss how it has performed and from the start. By the end of the session, we'll discuss briefly about this stock. Just keep watching this stocks for now for the whole day. The next one is Dixon. So the next one is Dixon. You just keep watching this stocks for today. If a viewer is like still learning and want to just check our accuracy and just want just here to watch the market, just observe this stock very carefully. Just keep this in your wish list. And yeah, it's in uptrend. And the software also like it has given a buy signal here at 9:51 today. It has given buy signal, so there is a in the multi-frame matrix also, which all are like in a uptrend only. There is multiple greens there. In the you can see a lot of indicators are showing there are like uptrend. So just watch out this stocks for today. We'll discuss this about the stocks very briefly by end of the session. So there is actually one more thing that is going on. Let's just talk about it for a while. Something that's happening behind the scenes. This may not move the market today, but it can make a big difference in the future. So SEBI is actually planning to make some big changes to the way short selling works in India. And right now, out of around 2,600 stocks listed on the NSE, only 176 stocks can be easily used for security lending and borrowing. SEBI now wants to increase that number so that many more stocks become eligible. They're also thinking about reducing the amount of collateral traders have to keep. At present, traders may have to keep up 130% collateral, which is must higher, more and much higher than in many other countries. So you might be wondering why. Yeah, so my guys might be wondering why is SEBI doing this? Because the reason is very simple. SEBI has said that many times that a large number of retail traders lose money in futures and also options because of these products are highly risky. So instead of this, people talking risky derivative positions, SEBI wants to make it easier for traders to take their bearish positions directly in the cash market through the short selling. So, in these chances, in these changes happen, if this happens, if it could actually improve market liquidity or increase trading activity in cash stocks also and help with a better price discovery. So these proposals are still under discussion. So nothing has been actually finalized that. But it's definitely something investors should keep an eye on over the coming next months. So there is actually some early discussion about easing certain rules related to Chinese companies doing business in the India. This could have an impact to companies in the power transmission and electrical equipment sector, but right now the details are still limited. So instead of just jumping to the all the conclusions, it's better to just wait for some official announcement before making any investment decisions. So actually, that was the latest regulatory side. These kinds of updates may not create a big moves in the market immediately, but over coming time, they can completely change how the market works, and that's why it's always good to stay informed, not just about stock prices, but also about the rules that shape the market. So as I mentioned, just keep your eye on the stocks which I mentioned. Just look out those stocks for the whole day, and we'll be giving you updates if we get a new updates, the news triggers which makes the particular stocks for that for its movement. We'll tell you here quickly with the quick updates. So we'll be back with the option chain analysis. We'll be back in 10 minutes with option chain analysis. Just be in the session. We'll be back soon.
So, hi everyone. We'll just talk about Nifty performance and option chain analysis. So, with the help of option chain analysis, we can plan trades for upcoming sessions. So, we'll just look at the technical chart first. Yeah. So, Nifty today currently opened at 23,244. We saw a huge gap down today. So the index has experienced fluctuations throughout the morning, trading around 24 to 23. It's currently trading 24 to 53 by 10:30 a.m. So this follows a minor pullback on Tuesday, where the Nifty 50 closed at 24,398, down by 31.65 points. So in yesterday's live itself, we had told that if Nifty closes below 24,400, then there is a high possibility of gap down. And price, I also told that price would go below 24,300 if that happens. So as told, we saw a huge gap down today. So analysts have identified the 24,300 to 200 band as the immediate support zone for the index. So on the upside, Tuesday's high created a hurdle around the 24,500 to 24,530 range. So a breakout above this resistance could potentially bring 24,600 level to focus. So we need the price to reclaim 24,300 level, which is just mark. We need index to claim this level. So currently market is trading around 24,252. So a breakout above this resistance could potentially bring the 24,600 level into focus. So global markets have been mixed, with US indices closing lower on July 7 due to weakness in technology shares. And GIFT Nifty futures were trading lower before the market opened, signaling a cautious start to Wednesday session. Technology stocks remain a key area of interest for market participants today. So traders are closely watching whether the Nifty can successfully defend its support level, which is around 24,200, where the market retested this level today morning at 9:38 a.m. So it came around 24,207, and we could see a potential bounce from there. So we just want to wait if the 15 minutes candle closes above this level. So we can then confirm that the price, there is a high possibility of price to move upward and potentially test the 24,600 level. So if you look at the corporate news, there is NAC Packaging IPO listing. So NAC Packaging shares are officially debuting on Indian Stock Exchange today. So the shares are being listed on both BSE and NSE in the B group of securities. So trading for the new script commenced at 10 a.m. as part of a special pre-open session. So the company sets its IPO price band between 161 to 170 per share. So market experts and grey market premium signaled that the stock would debut at a decent premium. So the IPO GMP had been tracking at approximately 12 per share, suggesting an estimated listing price of 182. So this represents a potential premium of 70.6% over the issue price of 170. So the public issue saw robust demand, being subscribed 83.33 times in total. And institutional interest was particularly high, with the QIB category subscribed 154.34 times. So the company successfully raised 439.50 crore through a mix of fresh issue and an offer for sale. So now let's just understand the open interest, and we will just mark these levels in the chart so that we'll have a clear picture for intraday bias for today. So let's understand the bars, puts versus call. So green bars represent the total outstanding contract for puts, and at the specific strike price. So because put sellers typically sell puts when they expect the market to hold a certain support level, high green bars are generally interpreted as support zone. So we could see the strike is currently at 24,250, and we saw a strong support at 24,200. which we saw a bounce that we saw in 938. We exactly saw a bounce from this level, right? So the price reached around 207, and we saw a strong engulfing candle, a bullish pattern candle, and price is currently moving towards 24,300 level. So 24,300, we have a strong resistance again. So these red bars represent the total outstanding contracts for call option. So at a specific strike price, call writers usually sell calls when they expect the market to face resistance. So tall red bars typically acts as a resistance zone. So the solid portion of often represent the base OI that hasn't been built over the time. So we can see the call OI has changed by 87.15 lakhs, which is currently totaling at 12.85 crore. And put OI has changed by 25.82 lakhs, which is currently totaling at 10.44 crore. But we can see a massive difference here. Put OI has just increased by 25 and call OI has increased by 87.15 lakhs, which makes 300 level a key important zone to watch for today. So a price closing above this, 15 minutes candle closing above this and staying above it definitely signals a bullish momentum for today. So we just need to wait and watch how the price will react when it reaches 24,300 level. So max pain, if we look at the max pain level, we could see it is showing as 24,250. So this is the strike price where the highest number of option contracts, both calls and puts, will expire worthless, causing the maximum pain to option buyers and maximum profit to option writers. So the market price often gravitates towards this level as entry approaches. So this is calculated by dividing the total put OI by total call OI. That is PCR. So if we look at the PCR ratio, it is around 0.894. So PCR less than 1 suggests more calls are written than puts, often viewed as a bearish signal or a sign that the market is struggling to break higher. And PCR greater than 1 suggests more puts are written than calls, so often viewed as a bullish sentiment where sellers are confident that the market will stay up. So when we look at this level, we can see that the PCR is at 0.894, which is neutral to bearish. So we need to wait if the price closes above this or rejects here. So if price rejects, then there is a high possibility that the price will again come to 24,200 level. So if we look at the India VIX level, it currently stays at 12.26. So a rising VIX often suggests uncertainty or fear. So the India VIX has rose by 0.61, which can lead to larger price swings and make OI levels less sticky as traders scramble to hedge. So how to use this chart for trading would be just mark these levels in the chart. So we have already marked 24,300 level, 24,200 level as well, 250 we need to mark. So since it's a max pain zone, just have a eye on this level as well. This acts as we can see that the price has rejected here twice, right? And it has given a strong breakout candle. So above this would be a strong level to watch out. So once it goes above it, then sorry. So once you see this level, you can see a break above this, and you can possibly look for the 400 level again. You could see there was a zone here. Yeah, you can see a broken demand zone. So possibility of testing this zone. If it rejects, then you need to wait how it reacts in this area. If it's break below this, then you can look for this level and wait for this level to break. So just identify walls. Look for the strikes with the tallest red and green bars. Look for the changes as we move on in the session. These are your call walls and put walls. So if you see price moving up and this call bars are increasing, then that's your signal, high probability signal for the price moving upward. And same for put as well. So if the price is falling and put OI, call OI bars are increasing, then that is a strong possibilities for a short build-up as well. If the price approaches a call wall and you see a red bar striking, so if we see a support level, so we saw 24,200. So if price again reaches this level, 24,200, and if you see this call OI decreasing, so if you see a hollow area in the bar, so we can look that the call OI are unwinding their positions, like it means the sellers are losing conviction or closing their position to avoid losses. So this is a potential breakout signal. So we can look for a strong bounce from this area as well. If the price is approaching this call wall, and if you look at 24,300, so if the price is decreasing, if the price is if you see the call OI change is decreasing and put OI is increasing, then that is a strong signal for a breakout. So you can look for a breakout here. So this is how you need to use this bars here. So never use OI alone. Always check if the price is conforming with the OI move. So as I said, for example, if the price is rising and OI is rising, it's a long build-up, which is a strong bullish signal. So always use in that context as well. So we'll just look for a notable market movements that might impact the index. So recent market volatility saw trend crash 11% on July 7th, wiping out nearly 18,000 crore in market capitalization. So I'll just show you the trend chart as well. Yeah, so we saw around our indicator has spotted a signal, and we would have gained around more than 13%. So this decline was triggered by Q1 revenue growth of 19% missing street expectations. So conversely, some stock are being highlighted for potential recovery, such as Hero Motocorp, which is consolidating near long-term trendline support. So if we look at Hero Motocorp, yeah, so we can see if we look at the so price was in a strong uptrend. We can see the chart. The major trend still shows us a downtrend, but the price has started to give us a minor structure shift for a potential uptrend momentum. So we could see a strong break above this high, and market has exactly retested this level. And market has also given us a strong support near a trend line and given a strong momentum here. So you can wait for the price to close above these levels. You have a strong pivot level, resistance level as well. So wait for the close above this level. So once you get a close and retest near these levels, you can look for a target for upward price, high potential for the price to move upwards. So Tata Steel is also being watched for a rebound, supportedly by high hidden bullish divergence, and Nippon Indian ETF Nifty IT, is showing signs of base formation near long-term support zones. So Adani Enterprise recently raised its shares sales size to 15,000 crore, following heavy demand from global and domestic investors. So the Adani Enterprise offerings saw participation from major asset managers like BlackRock and Goldman Sachs. Also, the rupee has been under pressure, recently slipping past the 95 per dollar mark, and RBI intervention have been noted as the currency crossed these levels to contain further volatility. So the broader market continues to monitor global geopolitical developments for direction. So the market is currently in a state of consolidation with a negative tilt. So the primary bias is watchful until the Nifty can either decisively reclaim this 24,300 level and potentially move upwards towards 24,400 level. Until then, we had to look. The market is currently in a state of consolidation with a negative tilt. So if it proves that it can hold above the 24,200 support level, then we can look for the potential breakout in the 24,300 level as well in the second half of the market. So why we said watchfully, the bias is watchful because there are factors that are driving cautious to bearish sentiment. So US markets closed lower on July 7th due to weakness in technology shares, which has negatively impacted investor sentiment. So GIFT Nifty futures also indicating a cautious beginning to the session, suggesting that local sentiment is taking cues from broader international instability. And if you look at the currency pressure, as we talked few minutes back, it has slipped past the $95 mark, which has prompted RBI intervention to manage volatility. The market is still digesting the major correction in trend shares, which crashed 11% and wiped out 18,000 crore in market capital, keeping traders wary of sudden negative earning surprises. So look for large corporate liquidities. So large scale liquidity events such as Adani Enterprise raising its share sale size to 50,000 crore and strong debut of NAC packaging IPO that we have talked few minutes before, which was subscribed 83.33 times, shows that there is still a significant demand and capital in the market. So we need to wait and watch how the Nifty reacts to it. So always keep looking at the call OI and put OI bars. Look at the change here that is shown, call OI change and put OI change. If it's increasing, if the call OI is increasing when it reaches a strong resistance level, then there is a proper resistance. Then the price might react to that resistance, and you can see a potential downward movement. If call OI is decreasing when it reaches a strong resistance and put OI is increasing, then it's time to look for a breakout above that particular level. So use call OIs in this level so that you will have a strong, high probability of taking trades. So this data is for educational purpose and does not constitute financial advice. So derivative markets are high risk and always consult a financial advisor before trading. So we are just providing this for educational purpose, so that you will always have a better decision making before a trade. So I hope the trade plans for Nifty is clear. Let me know if you have any doubts regarding this. Put your views on Nifty as well. So what position are you trying to take in Nifty? Let me know in the comments. So we'll be back with Bank Nifty analysis as well. So until then, let me know if you have any queries regarding this, or if you have a different view on this. Let us know in the comments. We'll discuss it together. We'll try to figure it out, your view as well. So yeah, we have just completed Nifty index analysis and using its option chain open interest. So we'll in the same way we'll just analyze Bank Nifty as well. So if we look at Bank Nifty, we can see that yesterday the price closed below 58,400, which we told as a strong resistance, which was a strong support before. The price was trading above this. So it has closed above it and retested a strong demand zone here. So we saw a strong rejection over this level. So yeah, we'll just see how open interest, options in open interest is behaving. So that we'll have an idea on that. So yesterday Bank Nifty closed at 58,200, which was down by 0.16%. So currently the index is in the phase of consolidation after a pullback from earlier highs. So global cues briefly touch upon the weak closing of US markets, especially the Nasdaq and chip makers, and the geopolitical tension in the Middle East, which are keeping the investors cautious today. So focus today tracking whether the index can hold its support or will it face selling pressures near its resistance wall. So if we look at the PCR level, it is around 0.989. So as I told, the PCR less than 1 is bearish, and PCR which is around 0.989 is cost neutral to bearish. So the max pain is around 58,300. So if we look at the level 58,300, which is this level, right? So we'll just remove all the old levels that we marked yesterday. So yesterday, as soon as we came below the resistance level, we got a strong sell, and we would have captured around these much points, which is around 1.06% we would have captured. So currently, the market max pain is at 58,300, which tells us that the premium would decay for both the call and put writers. This is the area where maximum profit booking will happen. So if we look at the call walls, we have a strong call wall at 58,000, where we have both call and put OI at equal levels fighting. There's a tug of war happening between the call OIs and put OI. So 58,000 is the level where call OI and put call writers and put sellers are fighting. So this is the key level to watch today. 58,000. We see that the current strike price is trading near 58,000. So we need to wait how the price reacts in this level, right? 58,000. So market has just given a close above this, and again it has closed below this. So we need to wait how price reacts this level. So this acts as a strong zone because both the call writers and put writers have a strong equal bars here. So total call OI is at 1.38 crore and put OI is at 1.23 crore. We have a slight increase in call OI, so we can sellers are one step ahead of buyers. Call writers are one step ahead of put writers. So we'll see whether as the price approaches this level, just look at this bar. If put OI is increasing, then you can see that the aggressive buyers are entering. If call OI is decreasing, that's a strong signal for price to break above this level. So if we look at the support, we can see we don't see a strong support level. We can see 58,500 as a strong support, but we can see that there is a decrease in put OI. We can see a hollow area in this particular bar. So put OI has decreased by minus 26.22k. So we'll just mark this level. Still, this acts as a strong support. Right. So 5800 would be the immediate resistance, as we have seen a call OI increase in this particular bar as well. And the next major resistance would be at 58,500. So wait for the price to close above this level, then you can target, first target would be at 5800 and second would be above 58,500. So we need to wait how the price reacts in this particular zone of 58,000. So don't just look at the absolute numbers, focus on change in OI. So if the price is up, since the price is approaching 58,000, you need to wait for how the price reacts. So it was around 1.83, so it has increased, right? Call OI has increased to 1.93. So we need to wait and watch for the next 15 minutes candle to close. So this orange line, orange vertical line in your chart is the at the money strike. So if you look at the sector and heavyweight that is impacting Bank Nifty, so as all know, Bank Nifty is moved by its heavyweights. So HDFC Bank and ICICI banks are the primary stocks. So HDFC banks fade from its intraday high, and it was the main reason for the index decline. So we'll just look at the HDFC stock as well. So yesterday here we got a buy signal and we could have captured around 2.45%. So we saw selling. HDFC is considered as the primary driver of index direction. So it faced a selling pressure after fading from an intraday high of 843 yesterday. So and if you look at the IndusInd Bank, so it is notable for relative resilience. It outperformed the index in the previous session, and it is a stock to watch for sector leadership. So it's currently trading above today's high. And if you look at the ICICI Bank, it was also an important stock in the last session, which was down by 0.86%, making it a key stock to track for potential stabilization or further weakness. So if you look at ICICI, we'll get a strong idea about its technicals also. Yeah, so we can see that's given a strong sell here. So we had got a buy yesterday on 3rd July. So we would have captured around 1.46%. So we have got a strong sell here. So we need to wait for the price to close below this trend line. So these are the stocks that are driving Bank Nifty. Like these are the heavyweights that are driving the index. So also note that Bank Nifty July futures saw a rise in open interest on a falling price in the last session, which suggests a mild fresh short positioning. Also keep an eye on India VIX. So if you look at the India VIX here, we can see it is raised by zero point 0.4, which is currently at 12.14. So low volatility levels can sometimes signal a quiet market, but traders should be prepared for sudden shift if crude oil prices or currency fluctuations spike. So emphasize wait and watch approach for the first hour to trader determine if the index will defend its support or break the resistance. So if we had to create a trade scenarios for today, so scenario A would be reclaiming resistance. So we saw 58,000 strong resistance level. So if index break this 58,000, and sustain above it, it may signal a shift in sentiment and potential for upward movement. So watch for volume confirmation and decrease in call open interest as we just discussed. So just look for the put OI increase and call OI decrease. So a decisive reclaim of this level is required to turn banking setup positive again. So yeah, just confirm this with call OI. If you need to see a decrease in call OI to confirm that the sellers are exiting their positions. So scenario B would be testing support. So we see a strong support at 58,000. If you look at the support, we have a strong support at 57,900, 57,800. We see a small put to increase in these levels. So yeah, look at 57,900 support. Just see how does 57,900 support reacts to the price level. So a break below this level may lead to a test of 57,800. So in this scenario, check if put open interest is unwinding, which would confirm that the buyers are capitulating. And the last scenario would be the range bound consolidation. So if index remains trapped between 58,100 and 58 800, it is likely in a consolidation phase. Avoid chasing the market, wait for the index to decisively clear one of these boundaries before committing significant capital. Also, track heavy weights that we just discussed few minutes before. The movement of HDFC Bank, which recently faded from highs, and ICICI Bank will dictate the direction of the index. A steady opening or recovery in these stocks is necessary for any broader index recovery. So yeah, combine OI with the price as well. Or the always remember, as I'm repeating several times, that rising price with increasing OI suggests a long build up, which is considered as a bullish momentum, while falling prices with increased OI suggests a short build up. So given the cautious trend, keep your stop losses strict and avoid emotional trading by sticking to your predefined plan. So always remember, this information is for educational purpose and does not constitutional financial advice. So derivative tradings involves significant risk. Always consult a financial advisor before executing trades. So this would be the analysis for Bank Nifty using open interest option chain analysis. So yeah, so we have discussed Nifty and Bank Nifty. So we'll also discuss about Sensex in the same way. So until then, let me know if you have any queries regarding this Nifty and Bank Nifty. Also, let me know if you're holding any positions. Let us know in the comments. So yeah, before moving to Sensex analysis, we'll just look at the upcoming event, which we have to stay focused on that, because those are the major newses that might impact the index. So just to shift the chart to Nifty. So we can see a major industry event titled Investment Economic in India. Manufacturing, FDI, and industrial transformation is being held today. So keep eye on that news as well. So seminar is hosted by FICCI at the Federation House in New Delhi, which is starting at 9:30 a.m. So the event is designed to bring together policymakers, industry leaders, and economic experts to discuss the future of India manufacturing sector. So discussion are expected to center around how foreign direct investments can be better utilized to drive industrial growth. So this seminar will analyze current challenges in the manufacturing landscape and explore innovative strategies for industrial transformation. So participants will likely address the impact of global supply chain shifts on India's competitiveness in the manufacturing space. So also attendants will gain insights into potential policy reforms aimed at simplifying the ease of doing business for domestic and international investors. So the event serves as the platform for networking the collaboration between government officials and private stakeholders. So, given the current market focus on domestic growth, the outcomes of the seminar could influence long-term investor sentiment regarding the infrastructure and industrial stocks. So, you should so always keep an eye on this news from this conference, as they might provide early hints about sectoral government policy. So the another upcoming event is on July 10th. There is a significant conference focused on enhancing competitiveness of mining and metals, which will take place in New Delhi. So the primary theme for this edition of the conference is focus area, efficient logistics. So this mining and metal industry is the backbone of Indian economy, and logistics is a key bottleneck that often hinders productivity. So, industry experts will discuss how to optimize transportation and supply chain systems to reduce operational cost for mining firms. So, this conference will also explore new technologies and digital tools that can streamline the movement of raw materials from extraction sites to production hubs. And sustainability in logistics, particularly in the context of reducing the carbon footprints of mining transportation, is expected to be a major discussion point. So government representatives are expected to outline upcoming infrastructure projects that could benefit the mining sector's logistics capabilities. So this discussion will also likely touch upon the regulatory framework and how it can be improved to support large-scale logistical operations. So these developments in the mining sector often correlates with the movements in indices related to basic materials and heavy industry. So always keep an eye on this as well. So these are the upcoming events. Before we move on to Sensex, I just wanted to inform you guys to focus on this as well. So yeah, we'll also move to Sensex now. So yeah, as we see Sensex, we can. So yeah, we'll just analyze the Sensex using this open interest option chain. So if you look at the strike price, it is currently trading near 77,800. So we see a strong call wall in 77,800. We just mark that level. So the price has closed above 77,800, which we can see. So the immediate next resistance would be at 77,900 and 78,000. Even though the call bar at 77,900 is not so big, but we don't see put OI bar. It's if you see the change in the put OI, it is around 3.69 lakhs, where call OI has been increased by 16.69 lakhs, which has a huge difference. So also consider 77,900 as a strong resistance zone. So the current Sensex is trading around 77,808, making a decline of approximately 0.48% from the previous session close. So the market opened lower today as investors adopted a defensive stance, pivoting away from the recent 4-day rally. The primary headwinds include a sharp rise in crude oil price, with WTI crude up by 2.53% and 72.22, and Brent crude rising by 2.56% to 76.06 per barrel, and renewed geopolitical tensions. Additionally, the Indian rupee has weakened against the US dollar, trading near 95.176, which is up by 0.23%, which increases concern regarding the imported inflation. So, as we talked, we need to wait for the price to stay above this level. The next 15 minutes candle, we need to wait to stay above this level. So, if it stays, then you can target this level, or you can target this level. So, if it fails to stay above this, then you can watch for the level above. Right. So if we look at the scenarios, if the index fails to stabilize above current support level, the market may see further selling as the recent global risk aversion from the US chip maker weakens continues to impact sentiment. So if you are looking for a bullish scenario to reverse the current intraday trend, the index would need to show strength in banking and financial heavyweights, which remains key focus area for liquidity and credit growth assessment. So the market is currently in a wait and watch phase. Analysts have previously noted the 78,000 level as acted it has acted as a psychological marker, and failure to sustain gains above recent highs has triggered profit booking. So, if you look at the sectoral highlight and news, despite the overall market weakness, the IT sector remains a focal point. Investors are watching for cues from upcoming earnings session, with major IT firms scheduled to report results shortly. So, Adani Enterprise remains in the spotlight, and traders are monitoring the broader impact of recent large-scale fundraising on market liquidity. So the weakness is broad-based, with many sectors seeing profit booking after Sensex gained over 1,800 points between the previous Wednesday and Monday. So this would be the analysis for Sensex. We have marked the level. So just align these price action movements with the open interest change, as we discussed in Nifty and Bank Nifty. So since it has taken a support at 77,800, look for the call over increase in 77,800 strike. So if it's increasing, then there is a strong momentum of price to go till the next resistance level, which is at 77,900. So once this level breaks 78,000 and stay above this level. If the price held holds above this level, then you can target till 78. You can target the price till 78 200 would be your first target, and 78 500 would be your second target. So 200 is here. So let's see. First, we need to wait for this level break. This is a strong zone, 78,000 and 78,900. So if we see a retracement somewhere around here, and again if the price closes above this level, then you can consider that retracement as a strong retracement and a continuation of bullish momentum. So yeah, we need to wait and watch how the price reacts to the 77,900 level, and how it is react. We will also look closely 77,800 level. So since the current market price is around 77 now. So yeah, that is about Sensex analysis. So it is based on this analysis is based on live market data and news available as of July 8th. So market data is subject to rapid change. The information is for educational purpose and should not be considered as financial advice. Please consult a financial advisor before making any investment decision.
So, hi guys. We'll, according to the heat map data we have, we'll check the sectorial performances, sectorial, the which and all the sectors are outperforming and underperforming. This actually gives a much better picture than looking at the just nifty numbers. So you can see there is a more red than green today, but just because the screen is red, just don't panic. The important thing is to understand where the selling is happening and where the money is moving. So if we take reality, let's start with the positive side because reality is actually one of the today's strongest sectors. So which is up around 0.84%. That actually tell us investors are still willing to buy selectively. Like even though the overall market is weak, money is finding opportunities in real estate stocks. So whenever I see reality outperforming on the weak market day like today, it tells me like buyers are still active. They are not buying everything. They're just choosing specific sectors. And yeah, if we take a metal sector, so metals are also like holding quite well today, up around 0.26%. It's not a huge move, but the important thing here is they are staying in the green while many of other sectors are falling. This actually usually means that sector is getting some support. Metal sector is actually getting some support, whether some global commodity prices or a stock specific buy. So definitely keep an eye on metal stocks over the next few sessions. And yeah, Pharma is almost flat today. It's neither a big winner nor a big loser today. So, but that's actually interesting because Pharma often acts like a defensive sector, as we know. Whenever the market becomes uncertain, investors slowly move towards Pharma because it's generally considered as a safer place. And yeah, if you take oil and gas, let's just talk about the weakest sector because oil and gas, which are down by more than 1.4%, this is the biggest drag on today's market. There could be several reasons behind this down of oil and gas, global crude oil movement, profit booking, or weakness in some heavyweight stocks. But whenever such an important sector falls in this much, it definitely like puts pressure on the overall index. And yeah, the next one is FMCG. It's also kind of under pressure today, which is actually down by 1.2%. Normally, FMCG is considered, this sector is considered as defensive, as we know. So, seeing FMCG underperforms, like tell us investors are like booking profits even in the safer stocks. So, sometimes after a good rally, traders simply lock in their gains. Like it doesn't always mean something is fundamentally wrong with the companies. Now we look at the banking. Bank Nifty is down around 0.6%. Private banks are down nearly 0.8%. And financial services also actually trading lower today. Since banks carry a heavy weight in the index, whenever banking stocks remain weak, Nifty also like struggles to move higher. So banking is definitely one sector that I'll keep watching for the whole rest of the day or today. So just you guys also keep your eye on Bank Nifty for now for today. And IT is also down only around 0.35%. So compared to many other sectors, it's actually holding up reasonably well. IT. So this tells us selling pressure in IT isn't actually very aggressive compared to today and other day. Buyers are still defending the IT sector. So media and chemical stocks are also seeing some selling today. These aren't the sectors that usually decide the market direction, media and chemicals, but they still give us idea like about the whole overall market and its sentiment. So here's the important thing I want everyone to understand is money hasn't disappeared from market. It's simply moving from like one sector to other. Today we are seeing weakness in banking and FMCG, oil and gas, and financials, while reality and metals are attracting some buying. So this is what we call sector rotation. So professional traders don't buy every sector together. They just continuously move money into sectors that look stranger and book profits in sector that have already rallied. So if particularly you, any of you guys are trading today, just don't blindly buy stocks just because uh, they are in trend or they have fallen. Just ask yourself why this sector is weak today. Is it because of news, or is it because of profit booking, or is it the trend actually changing? So understanding the reason behind a move is much more important than simply seeing red or green on your screen, right? So let's just go one level deeper, because I always say this price is just the result. The real question is what's causing the price movement. We'll be just deciding our stocks according to the OI and all right, also the sectorial performances. So you should actually check why that price movement is there in that particular stocks before actually getting into that. So today are these three major stories that the market is watching. And honestly, these are some more important than just looking at the red or green screen for today. So yeah, there are some triggers. One is one the bigger trigger which I mentioned in the morning, which is about Middle East tensions and also about the crude oil. Overnight, crude oil prices moved higher after fresh tensions between the US and Iran. So, whenever geopolitical tensions increase in the Middle East, the first thing traders look at is like only oil. So now you might ask, most of the guys ask like why does an event happening thousands of the kilometer away and it's affecting our market? The answer is very simple. I'll be talking about this particular thing in the every session, which is India exports more than 80% of its whole crude oil, and so if global crude prices rises, India also has to pay more to import oil. So that's how directly and indirectly it impacts Indian market. And once oils become expensive, it slowly like affects everything, like transportation costs, like it also increases. Airlines, like those spends more on fuels, as we know. So logistics, like those also becomes expensive. Manufacturing cost also it may rise. Eventually inflation also starts moving up. So that's exactly why you're seeing pressure today in the sectors like oil and gas and auto, even FMCG. So this is something many new traders miss. They think stocks are like falling randomly. They are not. They are not like falling randomly. There must be a reason behind the trigger. So one global event can create a the chain reaction like across multiple sectors here. So yeah, let's just connect these dots which we mentioned. So if crude oil becomes expensive, who gets affected first? Think about airlines, like fuels are one of the biggest expense for the airline companies, and then comes transport companies, then logistics, then FMCG companies, then they have to deliver products like across the country, right? So then the paint companies, chemical companies, tire manufacturers, because many of their raw materials are linked to crude oil. So this isn't just one sector falling; it's the most market pricing in higher cost of many businesses. So whenever the oil keeps rising for several days, keep an eye on these sectors because their margins can come under pressure. So one more thing I should mention here is about the IT. Like even though the overall market is under pressure today, IT isn't seeing a heavy selling today. You guys might be wondering why. You guys have this question why will because The only reason is because tomorrow TCS will announce its quarterly results, officially kicking off the earning season. So whenever earning season begins, institutional investors usually don't make any aggressive bets before the number comes out. So instead, they actually wait for that. They are waiting for their management commentary. They are waiting to know that client spending is actually improving or not. They are waiting to understand the whether that AI demand is translating into some actual revenue. Just don't just watch the TCS result. Listen carefully to what management says during their conference call, because that often decides the direction of the entire IT, the whole IT sector for the whole next coming weeks. So, as we know, banking is the backbone of Indian market. Whenever bank Nifty is like weak, it's very difficult for Nifty to make a strong upside move, because banks carry a huge weight in the index. So today, though, we are seeing some profit booking in private banks and financial stocks. Does that mean banking has become weak? Definitely not necessarily. Sometimes, after a good rally, large institutions simply reduce some positions and wait for fresh triggers. Like, you should remember this. Profit booking is not the same as panic selling. Understanding the difference can save you from many making emotional decisions further. And here the actual surprise is about the reality. Reality is actually one of the strong sectors on the screen for today. When the overall market is weak, but one sector continues to attracting buyers, that's actually a sign institutions are selectively deploying their money here. This tells us investors are not exiting the market completely. They are just simply shifting capital from weaker sectors into sectors which are showing relative strength. That's exactly what sector rotation looks like. And you guys might be noticing farm also, it's almost flat. And as I mentioned, and sometimes it's actually a sign of strength. So when market becomes uncertain, investors like often move into defensive sectors like pharma, because demand for healthcare doesn't disappear just because the market become bit volatile. So even though pharma isn't making any big moves today, just it's quietly doing its job as a defensive sector. So, yeah, one more thing I should mention here is we are entering one of the most important periods of the quarter, which is the earning season. Over the next few weeks, almost every major company will announce its quarterly numbers. So, and during the earning season, stock prices don't move only because of the profits. Sometimes the company reports excellent numbers, but the stock still falls sometimes, because the market was expecting even better results. Sometimes results are average, but the stocks rallies because the management gives a strong outlook for the next coming quarter. Just though don't judge a company only by its profit number. Always just listen to the guidance, order book, and demand outlook, and also the future expectations. And also the retail investors often think they just move the market, but the reality is institutions move the market. Like whenever foreign institutions investors start buying consistently, market sentiment usually improves. So if they start selling aggressively, even good news sometimes struggles to push the market higher. So every evening, one number I personally watch is that FI and DI data. So it tells me where the smart money is moving. So I'll leave you with one thought, which is a lot of beginners think market moves because of news, but uh, the only experienced traders know this fact that market moves because of expectations, The news is already known. The real question is, was the news better than expected or worse than expected? That's why sometimes you see great news and the stock falls. And sometimes you even see average news but the still stock rallies.
market era.
So, yeah, guys, actually, here's something that most retail traders don't realize is when we open our like trading app, we usually ask one thing, which is like, should I buy or sell? Like, most institutions don't think like that. They just question, they ask it like, where is the risk today? They just think about the risk because remember, big fund manage thousands of crores. They don't care about catching every single move. Their first job is to protecting capital, their own capital. So if they just feel global uncertainty is increasing, they just don't immediately sell everything. Instead, they slowly reduce exposure in a risky sector and move money into relatively safer sector. So that's exactly why today's heat map is so interesting. We I can actually see where money is leaving and where money is quietly entering. So this is why I always tell beginners don't trade individual stocks first. First, understand where the money is flowing because if the sector itself weak, even a good company can't struggle. And being honest, most people open the market, see one stock which is up by 5%, and immediately think they have missed a big opportunity. Then they buy near the top. 5 minutes later, the stock starts falling. Why? Because smart money bought it much earlier. Retail traders usually react after a move has already happened. So professional traders don't chase momentum blindly. They just wait patiently. Sometimes they'll sit for a hours before without taking any single trade, and that's completely normal. Because you should remember that not trading is also a trading decision. So you guys be thinking about this how smart money reads the market bulk, right? So here's small exercise that forget the nifty numbers for 1 minute. Just look at the you can see the heat map. You should ask yourself which sector is green, which sector is red, which sector is falling the most, and which sector refuse to fall. You will be surprised. Sometimes the answer to tomorrow's trade is already visible in today's heat map. So that's because institutional buying doesn't happen in a one day. Large funds take several sessions to build positions. So today's small buying could become next week's strong trend. And also, let me tell you something actually that may change your perspective about the market. Red markets are not always bad. It's in fact, professional investors often like red markets because there is because there is where the most opportunities appear when everyone's become emotional. Smart money becomes logical, so they don't panic. They ask themselves that has the business changed or is it only the price changing. That's a huge difference between professional investors and normal regular traders. So, and one lesson every trader eventually learn is stop trying to predict the market. No, so react to it. The market doesn't care about our own opinion. It's only response to money flow. So, if buyer becomes stronger, price of course go up. If sellers become stronger, price go down. It's actually that simple. So also money is never sitting idle. If institutions book profits in banking, the money doesn't disappear. It usually, as I mentioned again, it usually moves somewhere else, like maybe into realty or metals, pharma. It's called sector rotation. It just moved to somewhere else, somewhere, some different sector. Understanding this sector rotation is one of the easiest way actually to improve your market reading. So, end of the day, you should remember one thing, which is charts are important, news are important, results are also important. But the most important thing is understanding how money moves. Markets are not random. They are every candle you see on the chart is created because someone decided to buy and someone decided to sell also. So, our job as a trader isn't to just guess. It's to understand the story behind that candle. The better you understand that story, the better you take some proper impacting decisions. I want you guys to answer if you have any certain doubts about the any difficulty terms or any about any stocks. If you have any questions about the stocks, let me know in the comments. We'll discuss together. Put your opinion on the comment section. So, as I already told about the gold, gold is also like actually trading a little bit lower today. Many people think that whenever there is a global uncertainty going on, gold should automatically go up. But the markets are never that simple. Right now, traders are also focusing on stronger US dollars and expectations that the interest rates could also stay higher for more longer. And the higher interest rate generally reduce the appeal of the gold because gold doesn't pay an any interest. So today, though, we are seeing two different opposite forces. On one side, geopolitical tensions support gold, but on the other side, higher rate expectations and also the stronger dollar are putting pressure on these prices. That's why gold is moving in that very cautious manner instead of just making a huge rally. Also, as we discussed about the gold, silver is also trading in the same direction as gold. It's kind of trading lower today. Unlike gold, silver is not just a precious metal. It's also some industrial metal. It used in some solar panels and also some electronics, EVs, also batteries, and many manufacturing industries. So silver price depend not only on the safe haven demand, but also on some expectations about this industrial growth. So whenever traders feel global economic growth could bit slow down, silver can become more volatile more than the gold. Also the crude, if crude becomes keeps moving higher over the next few sessions, we could see pressure on the sectors like airlines, paints, tires, FMCG, logistics, because higher fuels costs usually impact their profit margins. On the other hand, upstream oil expectations companies may benefit it if crude oil prices remain elevated. So just don't just watch crude as a commodity. Watch how it impacts different sectors of all this whole stock market. Also, we'll talk about barometers of economy activity, which are like copper, zinc, aluminum, because they are used everywhere in construction, infrastructure, automobile, power transmission, also some manufacturings. When demand for these metals increases, it usually signals a stronger industry activity. So if you see copper and other base metals, which are like zinc, copper, and aluminum, staying firm, it's often a positive sign for a broader economy. So we should just check out the crude because of this geopolitical developments. Also the gold to see whether safe haven demands overweight higher than interest rate expectations. Silver is because it reacts to both investment demand and also the industrial demand. Base metal as an indicator of manufacturing and also this infrastructure activity. And I recommend you guys never just look at the commodities separately from the stock market. Commodities often move first, and equities react later. So if crude starts a strong rally, equity sectors linked to fuels costs usually feel this impact. So if copper starts rising steadily, it can be an early signal that the industrial activity is improving. Also the gold suddenly starts attracting heavy buying. It often tells us the investors are like becoming more defensive. So if you are only trading Nifty or Bank Nifty, spending only 2 minutes looking at the commodity market every morning can give you valuable clues about the day's market sentiment. So yeah, guys, that's what the sectorial performance of this. So let me know your opinion on your analysis, how you are doing, how which and all the stocks you are analyzing, and if you have any your own strategies. Let me know how this works on these particular stocks. Let me know in the comment section. We can discuss together. And if you have any doubts, let me know in the comment section. And you can reach out. You can reach out our team because we are as you saw from that time we are using multiple indicators here in this chart. You will be like seeing a lot of indicators, and it's not a regular trading view chart. So just to know about it more, you contact us. I have mentioned the link in the chat box. Our team will contact you as soon as possible, and you can check out our website, which I mentioned in the description. And if you have, yeah, if you can contact us anytime. We'll give you a brief demo on this product. And if you have any, if we have any updates, market updates or movement updates, we'll update you here in this live.
So, hi guys. So we had discussed Nifty index, Sensex, and Bank Nifty and options chain analysis, and we had also discussed about sectoral performances. We looked stocks to watch out for today based on open interest, increase in open interest. So with all that, we'll just continue with the commodity updates, and we'll also discuss the performance of yesterday's calls. So we also give calls we have a community, so we give calls there. So we'll also discuss the performance on the calls and the logic that we used. So we just so we before that we had in the morning session itself we had marked these levels. So I had told you guys to see the retest in this level and a strong bearish candlestick. So once I told that if this 24,200 level breaks, then there would be a huge momentum. So sorry. So as we said, we saw a break here. We got a strong bearish candle and we got a close below this level, right? We got a close below this 250 level. And I told you to keep first target as 300, so 200, and then if it breaks, then you can look for strong momentum. So yeah, so as per our analysis, it has one exactly. So let me know in the comments. Was the information really useful, and did it help you to take better trades? Let me know in the comments. Yeah. So before moving to the commodity update, so a viewer has asked about provide fundamental analysis of Geo Finance stock, technical analysis. Sorry, technical analysis of Geo Finance stock. So we see a strong structure break here. That stock is in downtrend. So we just received a news that Trump has announced that there is end of ceasefire between US and Iran. So we might see a negative downtrend in all the index and stocks for another few days, unless there is a peace deal uh, or any positive news regarding the related to war. So we need to wait and watch how crude oil reacts, everything. So currently the price is in downtrend. So if you are looking for shorts, then you need to wait for the retest of any of this level. Look for this resistance level retest, this level retest. So wait for the price to go there, and always execute your positions in the pullback. Don't just ride the trend, or else you don't know which would be the exact low. So wait for the downtrend. Let the price return to the strong resistance level, uh, and let it give a bearish pattern candlesticks. Then you can look for the short positions. So the price is currently in a downtrend. So or else what you can do is you can wait for the price to reach discount level of 1 hour. So discount level of 1 hour, you will get around this area. You will get around as a discount. So 236 would be a strong zone to short. If we switch to 15 minutes time frame, we also have a strong consolidation zone over here. So even this will act as a strong zone. So look for a price to reach this level and drop. So if price reaches this level and gives you a strong zone, then this has a high probability than this, because this even falls in a 1 hour discount level. So we'll be having a strong momentum. So this would be the technicals. So it has to break this level for structure, so for entire structure shift. So if this breaks this level and gives you a retest, giving a bullish candlestick pattern, just wait for the resistance break, resistance or a trend line break. So then you can look for a buy. So any buy plan should be above 238. The price should close above 238, and sell plan should be around this zone. Once the price reaches this zone, you can look for a bearish candlestick patterns, and then you can enter a trade short positions. So this should be the technical analysis on Geo Finance stock. So hope it's clear. So we'll move on to the commodity update. Before that, just a minute. I'll be back in just 5 minutes. So just let me know if a viewer has asked about Geo Finance stock. So I had just given I have just given my view on the stock. So this particular information is purely for educational purpose. So before taking, it is not for any investment decisions. Before taking any decision, please consult a financial person. So this analysis is to provide a view on this particular stock, and just understand that if your view aligns with my view, Yeah. So we'll just move to commodity update now. So we'll start with crude oil first. Yeah. So we can see a strong upward price movement here. So crude oil prices have surged significantly today due to renewed geopolitical tension in Middle East. So the escalating following powerful US strikes on Iran has disrupted supply expectations, pushing prices up by over 5% in the last 2 days. So the Brent crude is trading at approximately 72.25 per barrel, reflecting an increase of 1.81 dollar from the previous session. So markets are reacting to fears that shipping through the Strait of Hormuz remains highly vulnerable to further interruptions. Sorry. So traders who had large short positions are currently scrambling to reassess their market bets in light of the sudden supply fears. So global oil inventories, which were already drawn down during previous disruptions, are expected to remain under pressure for some time. So the expectation that global oil markets are heading towards a oversupply has been effectively challenged by these new geopolitical developments. The surge in oil prices is a primary driver behind the current weakness in Indian equity indices like in Sensex and Nifty. So we just saw even Nifty and Sensex just dropped a big candle on a bearish side. So always note that additional crude supplies from the Gulf will take time to reach international markets, sustaining upward pressure. So the increase in oil prices has also contributed to a strengthening dollar index, further complicating the broader commodity landscape. So if you look at the technicals, yeah. So yesterday we had just analyzed that once the price closes above this level and look at a strong upward moment, right? So we the price closed above this level, and price has shown a strong upward movement here. Yeah. So we have a current supply zone in a 1 hour chart. So even this will consider as a small correction as due to the ongoing wars. You can look for a small correction over here or in this level. Then you can look for a upward move. So this would be the update on crude oil. So crude oil is now bullish because of the war. So have a eye on this, and we'll now move to gold and silver market update. So the precious market metals are experiencing a mild downward pressure today as the market enters a wait and watch mode. So 24K gold is currently trading at an indicative rate of 1,45,560 per 10 gram, while 22K gold is at rupees 133 1,33,430 per 10 gram. So silver prices have also seen a marginal decline with MCX silver futures trading around 2,30,266 per kg. So the recent rally in precious metal triggered by a weak US data. Sorry, just a minute. Yeah. So the weak US jobs data is currently seeing some profit booking by traders. So geopolitical tensions are rising. Oil prices have strengthened the US dollar, which in turn makes dollar priced bullion more expensive for the other currency holders. Markets are awaiting fresh triggers, including upcoming US economic data and minutes from the Federal Reserve's June meeting. So there is increased speculation regarding US interest rate, with the odds of September rate hike rising to over 63%. So the current trading range for both metals is tight, indicating that there is no major directional move occurring at this moment. So while gold remains below its June peak, the global mood is described as cautious rather than bearish. Jewelry brands have seen slight price adjustments today, with many major retailers reducing rates for 22 karat gold jewelry. So if you look at the technicals, we see market is in downtrend, right? So we see clear structures here. So we can see a proper structure in the trend here. So it's in a clear downtrend. So you just wait for a pullback and you can look for a short positions. You can wait for any of the zones or discount level in the 15 minutes. So we can look. So this level acts as a strong zone. You have a broken demand zone here. So you can look for a trade here. This is a key area to watch. Don't just blindly enter. Just watch how this area reacts. Then once you get a strong bearish candlestick patterns or a change in state of delivery, then you can look for a short setups. This would be the technicals for gold. So gold is in proper downtrend, and we have also got a sell signal from our indicator. So whenever you identify the trend, you get a proper sell signal, you can easily achieve points from our indicator. We would have achieved 2.61% from this single entry. Also, we saw this was a correction level. So we got entry in the pro trend again. So we would have again captured around 3%, right? So whenever you see a sell signal in a pro trend, you can execute it without any hesitations, because our indicator has such a strong accuracy. You would have achieved 4.91% here. And again, if you look at, you would have achieved 4% here. Again, you would have achieved around 5%. So if you know to identify the trend, then we can easily use this indicator. You can easily adapt to the sell and buy signals. Yeah. So this is about the commodity update. We had just covered commodity on both the crude oil and gold silver. So now we have got few major newses. So there is United States launched airstrikes on over 80 targets in Iran following Iranian attacks on commercial ships in the Strait of Hormuz. So, in response to the US strike, Iran has targeted Bahrain and Kuwait. Kuwait has strongly condemned this illicit attack, stating they undermine regional de escalation efforts. So, crude oil futures surged to a 2 week high, rising to 6,932 per barrel on the multi commodity exchange due to renewed supply concerns. So, the European Union Aviation Safety Agency has advised airlines to avoid airspace of Iran and Iraq until August 31st. So, funeral processions of Iran's late supreme leader Ayatollah Ali Khamenei are underway in Iraq. His son Ayatollah Khamenei, the new supreme leader, has not yet appeared publicly amid reports he was wounded in the same strike that killed his father. So, if you look at the national news, the individual accused of murder of a 11-year-old girl in West Bengal has been shot dead in police encounter. So, and the Union Home Minister regarding the Wayanad disaster, Amit Shah has assured the Kerala government of full central support regarding the recent Wayanad landslide disaster and urged for a high-level inquiry. So both the BSE, Sensex and NSE Nifty 50 opened lower today, continuing the trend from previous sessions. Late stage profit booking in early trade. The Sensex declined by 537.83 points to 77,642, which is currently trading at 77,492. And Nifty 50 fell by 163 points to 24,231. So when we look at the sectoral focus, sectors such as oil and gas, auto and PSU banks have also faced declines. Conversely, some IT stocks and pharma shares have remained in focus for investors amid the broad market consolidation. So these are the recent news, and just keep all these news in mind, which might impact the stock market. So we'll now just move to the calls that we gave yesterday. So until then, let me know if you have any doubts regarding uh, any particular stock to be analyzed. Just put it in the comments. Yeah, so you can see the image which is displayed on the right side. So these were the calls that we gave yesterday. So this was a BTST call which was given on 5th of July. So yeah, this was given on 6th of July on 3:20 p.m. and the strike price was around 77,900 call option, and we had achieved 160 points. So I can also show you the chart as well. Just a minute. Yeah. So we had given the price to buy on. Yeah, we had given the price to buy at 550. The entry price was at 550. So yeah, you can see the entry price was at 550. Exactly, we gave at 3:20 p.m. So just shift it to 5 minutes so that you have a clear idea. So yeah, so we had given a entry at 320, which around 550 to 560 was the entry. So the price has easily achieved. Our stop loss would be 100 points below the entry. So 450 was our SL. So and target would be around 1 is to 1.5 or 1 is to 2. So we easily achieved more than 250 points, but our target was only 150 points. So we had easily captured it. So this was one call, and the second one was at. Yeah, the second one was 78,300 call option, which was on 7th of July itself. So the entry price was around 410, and we achieved 85 points. So the first target would be 80, second would be 100, and third target would be 150, more than 150 points. So we achieved the first target, which was around 85 points. So this was the second entry that we gave, and and in Nifty, we gave three entries, which was 24,750 put option, which was given around 9:17 a.m. and it had achieved 57 points. And the second entry was at 9:21 a.m., which we gave 24,700 put option to buy at entry price 270 to 275, which we achieved 77 points. And the third entry was a zero or fly call, so which was given on 12:15 p.m. The strike price was 24,450 put option. The entry price was around 16 to 18, and we can see we had achieved 38 points from there, so we would have easily doubled the capital. So we totally captured 172 points. In Sensex we captured 245, and in Nifty we captured 172 points. And the next one was the stock option, where we gave Trent 2100 call option, which was given in 9:43 a.m. So the entry was 50, and the target we achieved was 21 points. So the second trade was given by 9:59 a.m. We had told to buy 6,800 put option in ABB. So the entry was at 191 to 194, but unfortunately this triggered RSL. So it was down by 35 points. So the third trade was Nuvama stock, which we gave this call by 2:16 p.m. The strike price was 1,900 call option. The entry was at 670, but we had told our community to exit at break even since there was a sideways momentum. So these were the stock option performance. So we saw Sensex performance that we gave yesterday, and Nifty performance also that we gave yesterday. Yesterday was expiry, so we had given three calls, and third was stock options, and this was a commodity call. So we gave a call on crude oil 6:18 p.m. So it was on 6,300 call option. The entry was 323 to 328, and we had achieved 92.5 points. So I'll just show you in the chart as well. So yesterday we gave a call by 6:18 p.m. So the strike was at sorry, the price, the entry was at just a minute. The entry was at 323 to 328. All right. So six. I'll just zoom in for you. So yeah, you could see here it was around 320. It has we gave it 618. So the price came to our entry by 630, and it has given us points 418 was our target. So it easily reached our target. So we had achieved around 92 points. So this was the call performance of yesterday. These were the call performances. So a viewer has asked that in this week, is there any possible to cross 24,200? So it's likely not possible as we got information regarding the Trump announcement. So market is likely to go bearish until we see a positive signs regarding the war. So until then, we can't predict any upside move. So there will be a retracement, and price is highly likely to continue the downward trend until we get a positive sign from the uh, positive signs regarding the war. So yeah, we have covered all the calls that we gave yesterday. We had also covered the commodity update. So we'll be back with the question and answer session. So I'll be asked most asked questions, and I'll be answering to those questions. So before moving on to the question and answers, let me know if you have any particular question. Drop those questions in the comments as well. We'll try to answer those questions as well. So I've just answered a viewer question that is there any possibility to cross 24,200 in this week? So the answer is quietly impossible. No, it's not possible, as we just got a news regarding the Trump announcement regarding he will be breaking the ceasefire, and he has also attacked the Iran. We saw 40. He has attacked in an airstrike. So there's been an airstrike attack on Iran. So this would drive the market negatively. So there would be a continuation of downtrend. So any positive news related to a ceasefire or the peace deal might bring the Nifty back to 24,200. So until then, we have to wait and see. So yeah, just we'll be back in another 15 minutes. So until then, let me know if you have any questions.
So now we are just discussing some questions which most people will ask and most people have this in their mind. So I want to ask about the volatility. So how does volatility skew impact option price, and why isn't it implied volatility flat across all these strikes?
So that's a very good question. So in the standard Black-Scholes momentum formula, a core assumption is that the volatility of an underlying asset is constant across all strike prices and maturities. So if this were true, a plot of implied volatility against strike price would be flat. So in reality, we see volatility skew and volatility smile. So the skew exists because markets are not perfectly log normal. They suffer from a fat tails, which we say extreme downside moves happen more frequently than a standard normal distribution expects. For stock indices, out of the money puts have significantly higher implied volatility than OTM calls. So this happens because institutional investors buy deep OTM puts as portfolio insurance against sudden market crashes. So this heavy buying structural demand inflates the premium of puts. So when we look to the commodity markets, this is where the volatility might happens. So in assets like oil or agricultural products, a supply disruption can cause massive upside price spikes. So therefore, both deep OTM puts and deep OTM calls command high premiums, creating a U-shaped smile curve. So this is what we call as volatility skew or volatility smile, and this is how it impacts option pricing. So yeah, that's the answer for your question.
Okay, so actually this one's actually most asked and kind of difficult kind of question, which is like what's difference between delta hedging and gamma scalping?
So both both are structural risk management structural risk management techniques used by institutional option market makers, but they manage different orders of derivative risk. So delta hedging, which is also called as first order, delta measures how much an option price changes per rupee or dollar move in the underlying stock. So if an option market maker sells a call option with the delta of 0.60, they are shorting 60 deltas to make their position delta neutral. They will simultaneously buy 60 shares of the underlying stock. So when we look at the gamma scalping, delta is highly dynamic. It changes as the stock price moves, but gamma measures the rate of change in delta. So if you're long gamma holding long options, your delta automatically increases as the stock price rises and decreases as it falls. Yeah, so the profits generated from these micro trades are used to offset the theta decay, which we call it as daily time decay cost of holding the long positions. So that's how that's the difference between delta hedging and gamma scalping.
So the most asked question for the newbies and the new traders who want to learn more. So what's exactly difference between this Sensex and Nifty? Most people be asking these questions, have this particular questions in their mind.
So okay, these are the stock market indices which acts as a scorecard for the overall market health. So Sensex is an index of the top 30 large cap, well-established companies listed on the BSE, and Nifty is the index of top 50 companies listed on the NSE. So why they matter is instead of checking the prices of thousands of individual stock to see how the economy is doing, you can simply check the Sensex or Nifty. So if they are rising, it generally means the market is performing well overall. So this is the difference between Sensex and Nifty. So I hope all the people who are new to stock market will have an idea of what is Sensex and Nifty.
It was actually easy and perfect answer for that question. Hope everyone who's watching, everyone have this doubt, got their clear and perfect answer. So one more question for the newbies who have their like these questions to everyone will be having. What's difference between investing and trading?
So while both involve buying and selling, their goals and time horizons are fundamentally different. So investing is usually a long-term approach. Investors focus on the fundamental health of a business like its profit management and growth potential. So the goal is to build a wealth through long-term growth and dividends. But when it comes to trading, it's a short-term approach like it deals with minutes, days, or month. Traders focus on price movements and technical trends rather than the business itself. So the goal is to buy low and sell high quickly to make a profit from market volatility. So this is the major difference between investing and trading.
It was a clear cut and easy way of telling that answer. Hope everyone got that answer. So what is dividend then? How do I get one?
So a dividend is a portion of a company's profit that it chooses to distribute to its shareholders. So when a company makes a healthy profit, it may decide to keep some for reinvestment or to grow the business and give the rest to shareholders as a thank you for their investment. So you don't have to do anything special to get it. If you hold shares of a company on their record date, the day they check who the shareholders are, so the dividend amount is automatically credited to your linked bank account. So note that not all companies pay dividends. Many high growth companies prefer to reinvest all the earnings back into business. So if I have to give a pro tip for beginners who are for the stock market, so many new investors worry about picking the perfect stock. So instead of trying to guess which individual company will win, many beginners start with index funds or ETFs, which allows you to invest the entire Nifty 50 or Sensex at once, automatically diversifying your risk across 50 of India's biggest companies. So in this way, you might diversify your investments. So this is what dividend is, and this is what you receive dividend. This is how you receive dividend. So I hope the answer is clear for all the beginners.
It was actually perfect answer and clear cut answer what's exactly meaning of this dividend. So we have discussed the most asked questions and in the beginner level. Because most of the people who are just new to the market want to know a lot of things about it, and people who are just completely new, they don't know the basic differences also. That's completely fine. Hope you got answer. Every day we'll be discussing the most asked and most asked questions and beginners questions. Usually they get in their head. So we'll be discussing that and also some questions which is regarding today's market or pre-market or yesterday's market. So if you have any particular questions in your head, people who are watching, if you have questions in your head, say if you are a complete beginner or you're just trying to learn a lot of things or you're a pro but you still have a bit doubts, just let me know the questions in the comments. We'll discuss it and we'll talk about it. You get an idea. It looks like we are having a group discussion. So we can discuss it together. Just let me know your questions in the comments. Yeah, guys, that's it for today. We'll be back with the new updates and new news and new data tomorrow. We'll start at 9:15 when the market opens. Please join, and if you want a quick updates from us, subscribe and you can click the bell icon because you get very quick updates when we update something. So that's it for today. For the people who are holding positions or people who have came out of the trade, uh, have a good day for them and good luck. Thank you so much. Have a great day.